What's going on, y'all? Welcome to the Alpha Financial Group webinar presentation. I'm so excited to be talking about this specific topic today. This is the most powerful investment and wealth building strategy I have ever heard. I have traveled all over the world, all over this country to learn from some of those wealthy men, some of those most incredible entrepreneurs you currently know of or haven't heard of. They're just the most incredible men and women who have accomplished incredible things, and they all say the same thing. The problem that I keep seeing is this is not something that's all over social media. All over social media, you're seeing day trading, you're seeing crypto, NFTs, and real estate, and they're all great if that's what you choose to do. However, they say if you want to get somewhere, talk to someone who's already been there. So by talking to these people and by literally seeing that all my wealthy friends and mentors have all said the same thing, and yet this is something that no one's talking about on social media, I cannot wait to be putting this out there for you guys to be getting this secret, the secret of the wealthy, in my opinion, the best kept secret of the wealthy, and that is life insurance. Wow. Everyone always freaks out when they're like, what do you mean life insurance? Insurance, they think insurance is in car insurance. They think just another bill. This is the best kept secret of the wealthy, and it's not even close. And what I'm going to show you today is exactly how this is the most powerful thing you've never heard of and are not using in regards to building your wealth and building generational wealth and to saving and keeping your money. I'm going to blow your mind with what we're going to be talking about here in this webinar. I'm so excited to dive right into it. But let me back up and let me just get right into it, okay? Right now, you have been given a game plan. This is society's game plan. Go to school, get a job, W-2 employee, you typically use student loans to go to school, invest in your 401k, buy everything in cash, credit cards are evil, never have any debt, and make sure you play it safe. If this doesn't sound like something that you've been taught, whether it was in college, high school, or by your parents or someone you know, this is the game plan that everyone's been taught, and this is the worst, the absolute worst game plan you could ever do. The only thing worse than this is basically going out and blowing your money on cocaine and strippers. Like, this is not a good strategy in order to grow your wealth, and let me show you why. First off, student loans, college, stop wasting your time. Unless you're going to be a doctor or engineer or anything like that, just to give you guys an idea, we're spending so much money on this specific game plan, $1.57 trillion in debt. That is an epidemic. That is a catastrophe. There's so much debt hanging over our society and almost every American that we have now become this asset for the government. And with all this set in stone, with the 401k program, W-2 jobs, and the taxes you pay on your salary and buying everything in cash and not using credit cards, I'm going to show you why this is the worst game plan and give you an entirely new game plan that, again, this is the secret of the wealthy. This is how they've grown their wealth. And if you want to escape the rat race, if you want to get out of this situation, you have to follow this strategy. Number one, the thing you have to understand before I show you exactly what the strategy is, you need to understand what to avoid. There's a famous saying that says, there's more money to be made in avoiding losses rather than seeking gains. So there's the people out there who are seeking gains, seeking for that big one-hit wonder, the next crypto that's going to blow up, maybe even actually just doing sports betting or they're gambling, trying to win the lottery. They're trying to hit it big. And there's ultimately way more money to be made if you just understand how not to lose your money as opposed to chasing the big returns and seeking these gains. And these are what I call the 3 killers of wealth. If you understand these 3 killers of wealth, then every time you look for your money and where you're going to put your money, you will think of these 3 things. Now, let me just get this right off the bat. I am not your financial advisor. This is not financial advice. This is what I have been taught by my mentors and what I have applied to myself. This is nothing but advice, and this is nothing but education for you. So if you choose to do this or not, do at your own risk, but let me just dive right into it. Number one, biggest killer of wealth, taxes. Taxes will destroy your wealth if you do not understand how to honestly maneuver the game of taxes, because at the end of the day, taxes is not this big restriction thing. The tax code is a roadmap. The tax code was not written by politicians. It was written by millionaires and billionaires. They write the tax code. And as long as you understand the tax code, it gives you a roadmap of where you should put your money. Next, volatility. What does volatility mean? It means when there's a potential super high up and down cycle, it's very volatile. You never know what's going to happen. There's a huge potential loss. This is what I consider with the stock market and crypto, extremely volatile assets that could honestly tank with just a tweet. And we see that especially in today's age with what we have, everyone and the rate of information that we have. Anything, a lot of things are so volatile. I mean, I've seen stocks and cryptos spike just from a tweet from Elon Musk. That's how volatile things are in today's society. So you need to understand volatility. Number 3, inflation. Of all these, taxes are the biggest one. Inflation may become the biggest one. We're going to dive into exactly why you should understand inflation and just how big this problem is. Number 1, taxes. I want you to take a look at this chart here. If you think taxes are high right now, take a look at this. It's 2022, currently, January 2022. This is a chart that shows back in 2017 from TPC. And if you actually look at this, taxes are lower than they've ever been. Taxes are currently lower than they've ever been in our history, because if you look back at the tax bracket, it got as high as 90% in some tax brackets. What should that tell you? That should tell you that if they're lower than they've ever been, then moving forward in the future, do you think they're going to go lower or higher? My bet is they're going to go higher. Naturally, this is why 401ks are a failure. 401k plans and these sort of investment strategies are tax deferred programs, meaning you are deferring your taxes on your money. Your money goes directly in your 401k, paid from your salary, and the taxes are not taken out in it until the end of the cycle. But why is that a problem? Because you're deferring your taxes when the taxes are lower than they've ever been, and so you're going to pay more taxes when you go to pull out your 401k on a higher tax bracket with more money. It's and you can't even use the money while it's in your 401k. So just alone with taxes, by being a W-2 employee, you do not control your taxes. Taxes are taken out before you even get paid. With your 401k, you're deferring to a higher tax bracket. Look at taxes as what you need to avoid, because this right here is the biggest killer of wealth. As I said, it's not a restriction. It's a roadmap. If you understand it, you can grow. If you don't understand it, you'll take some big losses. Now, volatility. This comes down to one principle you need to understand: compounding interest. What I want you to do, I'm not going to show you right now, but I want you to think about this. If you took a penny and you doubled it every single day for 30 days, how much money would you have at the end of 30 days? The answer is about $5 million. Going from a penny to $5 million in 30 days. That is the power of compounding interest. And if you see it, once you get to day 15, you're only at maybe 10, 15, 50, or whatever, $50. And you're halfway through and you still barely have any money. But then you look at the last 15 days and compounding interest takes place. It continually grows on top of itself. And as Albert Einstein said, compounding interest is the 8th wonder of the world. He who understands it earns it. He who doesn't pays it. Because compounding interest, as great as it is, uninterrupted compounding interest being the 8th wonder of the world, being the most incredible thing of way to grow your money, is also a double-edged sword. And just as fast as it can kill your wealth, as it can grow your wealth, it can kill your wealth. So you need to understand. Invest like the wealthy, where you participate in market gains, but you're guaranteed to never lose when the market drops. When you take a loss, it is a bigger loss because in order to get back to where you were, you need a bigger gain. Let me explain. With a 10% loss, you must make the next year, say 1 year you take a 10% loss, which is totally normal in any stock market. You take a 10% loss, the next year you need to have a 12% gain just to get back to where you were, just to break even. So not only did you not have 2 years of growth, so you lose the opportunity cost, but you had to recover back from that 10% loss by getting an even bigger gain. So you lose out on the 12% gain, but you also lost out of 2 years of potential compounding growth. So the opportunity cost, something you also have to take into consideration. But it gets worse. If you take a 20% loss, then you'll need a 25% gain just to break even. So a loss, you have to have a bigger gain just to get back to where you were. With a 50% loss, you need a 100% return the next year just to break even. So if you had $100 in your account and you took a 20% loss, the next year you got a 20% gain, you're back even? No, you're not. You're only at 96 bucks. So from 100 down to 80 with 20% loss, you get a 20% gain, you're still negative. So understanding volatility and how to avoid taking losses, as Tony Robbins says, making sure you put your money where you're guaranteed never to lose when the market drops, that is the key to making your wealth grow and compound on top of itself. Let me show you. This is the power of compounding uninterrupted interest. As I talked about the penny, if you were to double it every single day for 30 days, look at how much your money grows if you never interrupt it. However, how much of a gain you need just to recover if you were to take a loss. So why am I talking about this? I'm going to wrap all this back up to why I was telling you about why life insurance is the most powerful, incredible wealth building strategy you've ever seen and probably never even heard of. And I'm going to get to that. But next, I need to talk to you guys about inflation. Inflation is what we call the silent killer. This happens year after year. Our dollar's constantly losing money. And let me explain. Back in 1970, if you had a minimum wage job in 1970, you could afford the same lifestyle as someone who makes $100,000 a year today. What does that mean? It means if you made minimum wage back in 1970, you could afford the same lifestyle, same relative size of house, same amount of cars, same amount of vacations, because the cost of living, because the dollar wasn't as inflated, because making minimum wage could get you by in America, as opposed to today, you would have to make $100,000 a year to afford that same lifestyle. And that is the devastation of inflation. A new house back in 1970, the average cost of a new house, $26,000. Today, $320,000. Gallon of gas, 36 cents. Wouldn't that be nice? And I'm putting here at $2.60. If you're watching this video right now, January 2022, you know damn well that the gas prices are in the $4, maybe even $5 range. In some places in our country, it's $7 a gallon. And look, speaking of gallon of milk used to be $1.15. Now it's up to $4, and even in some places $6 and $7 a gallon for milk. This is the devastation of inflation, because the people who don't understand inflation and stay on top of this wave lose out, because it gets more and more expensive to live and your relative income does not keep up with it. Now, why is this happening? Well, what did we just do? Inflation's been happening for a very long time, but in 2020, we printed almost half of our entire money supply that we've ever had in our entire history of the United States. The last century, we've had so much money printed, but we did more of it in 2020 with over $5 trillion in printing, and we keep doing. We're printing money, acting like there's no relative consequence to printing this much money. Let me explain. When we print this much money, it devalues our dollar and it makes everything more expensive to buy. However, the thing that does not keep up with it is wages, is the W-2 job. So what happens here, you see healthcare costs, college education costs, housing costs, but then you can also look back at just like the cost of gas, the cost of milk, the cost of anything goes up, but income does not keep up with it. So what happens is the middle class is dying. The middle class, keeping their wages, cannot keep up with inflation. They do not have the investments that stay on top of inflation, so they cannot afford more and more things, so it becomes more and more difficult. If you go outside the United States, you see a lot of countries, there's a lot of wealth on one side, and there's a lot of poor on the other. In Mexico, it's a perfect example because there's a lot of poverty in Mexico. There's also a lot of wealth in Mexico. People don't realize that. There's a ton of wealth in Mexico, but right across the street, you can see dirt poor. This is how it is in a lot of other countries. And what made America so incredible was the middle class, was the fact that you could come, have a reasonable job, and make enough money to have a good life for you and your family. That was America. That is what it's about to be in the middle class. But more and more with inflation, there's this pull happening with the middle class. With the society game plan of W-2 job, 401ks, and never increasing your wealth, not putting your money where it's supposed to go, we are not keeping up with inflation. We're not keeping up with taxes or putting our money into things that are extremely volatile. So there's this huge gap that's happening between the wealthy and the middle class and the poorer class. And so you see this big dispersion. The wealthier getting wealthier and the poor getting poorer. That is what happens with inflation. And if you do not understand this, you will fall on the wrong side of that pole. So I'm talking to you about this because what I'm about to show you is the best strategy for your money. This is the strategy that every multimillionaire and some people I'm talking to, net worth of 500 million, 700 million, a couple have billions of dollars, and they're all doing this exact same thing, the Triforce of Wealth. This strategy right here is sometimes without even them knowing, is where the wealthy put their money. Because again, if you look at the tax code, if you look at the Constitution of the United States written, it is written to benefit these people, the business owner, the landowner, real estate, and yes, life insurance. Life insurance is written all throughout the tax code as one of the best things you can put your money into, and I'm going to explain exactly why. We're going to dive in right now, and I'm going to show you why life insurance is the best investment you'll ever make for your money and will help you avoid all three killers of wealth. And if you do not understand this, you're going to fall behind. One of the most impressive things you'll ever see right here. But by the way, I just want to show you this. This is the power of inflation. That is a $1 trillion bill in Zimbabwe. That is the kind of thing that can happen in a country when your dollar is dying. It becomes very, very difficult to afford things. Now, why life insurance? Why does this matter? I'm kind of wrapping this back up. We've gone through the three killers of wealth. We've gone through all this. I hope you understand that. If you haven't, go back through this video, study what I'm showing you here, do your own research, look into this, see what I'm saying, and talk to people you know who have been there, done that. They'll all tell you the same thing. Businesses, real estate, and life insurance. So, why life insurance? Number one, it's tax-free growth. This is one of the most purest forms of growth that you do not have to worry about, tax-free growth. When you put your money into stocks, bonds, or anything else, as your money grows, it is taxable, meaning every single year you have to pay what's called capital gains tax on your growth. So you're getting taxed every bit along the way as you have your money in there. Then there's something called a tax deferred plan. This is what we refer to with the 401k. 401k is you're not paying taxes on the front end when the money comes into the account, because when you have a W-2 job, your money hits your bank account, but the taxes are pulled out first. But when you have a 401k, the money goes directly into your 401k, whatever percentage you choose to put in there, going into your 401k, and it does not get taxed in there until you choose to pull it out at whatever time. Normally 59.5 is the designated mark where that you can pull out your money without any fees. But tax deferred program means you're not paying taxes on the front end, you're paying taxes on the back end when you choose to pull out your money. And then there's tax exempt. Tax exempt is where you're taking your money that's already been taxed up front and putting it into something that can grow tax-free. So now you're not interrupting any of your compounding interest, and now you're not pulling any money out for capital gains tax. Your money grows tax-free. So you're avoiding the biggest killer of wealth with your taxes. You don't have to worry if the taxes are hitting 90%, 70%, whatever. Your money is growing tax-free. Now, volatility. How does this help you avoid volatility? With life insurance, what people don't understand, I'm talking cash value life insurance. There's two things that happen. One, when you own life insurance and you're paying for it, you get what's called a death benefit, meaning when you die, a certain amount is paid out to your beneficiary. So if it's a husband and wife and the husband dies, then the life insurance is paid out to the wife a certain amount. We'll call it $250,000 in death benefit that you're paying for with life insurance. But what people don't know is that in life insurance with an IUL or whole life, either one, we're going to focus on IUL right now, you get also something called cash value, meaning every month you're paying on your life insurance, your money's being put into this cash value account that grows at a guaranteed rate, 1 to 12%. Some companies have different ones, but we're just going to stick with this, 1 to 12% growth. That means that no matter what happens in the marketplace, no matter how much loss happens in the stock market, you're guaranteed a minimum base of 1%. And also it means if there's a 20%, you're capped at 12%. So some people would say, oh, I'm missing out on the 20% gains. Yes, but you're also avoiding losses. Remember what I said at the beginning. There's more money to be made in avoiding losses rather than seeking gains. And by avoiding all taxes and avoiding all losses in the stock market, you never lose compounding interest effect. Your money's constantly growing. Let me show you. With fixed, your money's just growing like this. With indexed, your money, as opposed to stock market going up and down. Look at that. It's not, rather than going up and down, your money goes up and then flatlines. So if there's ever a loss, your money never loses. You're flatlining and then it goes up and flat. It looks like this stair because you're never ever taking a loss, and how much more it grows that's a huge factor. Let me show you. IUL returns have outperformed the S&P 500 for the last 50 years simply because of this. And you can look at this chart. In 1999, there was a 19% return in the stock market. So if you had, $100,000 in there, you made $19,000. But for people with IUL, we only made, $11,000. We only got 11% because it was capped at 11.5. Oh, that sucks. But then look at the next year. The next year, there's a 10% loss in the market. And does this happen? Yes. This is so common. You look at this, almost half of the years in the stock market are taking a loss. So by avoiding this losses, look at what happens. 10% loss. They lose money, you stay the same. Next year, 13% loss. They lose money, you stay the same. 2002, 23% loss. They're down to $71,000. You stay the same. You never lose your money. You never have to worry about taking a loss. The next year, 26% gain. They're back up to $90,000 now, but remember, that 26% gain on those losses is not nearly enough because they haven't even gotten back to recovery because of opportunity loss. But then you come over here, you get the 11.5% return and you're at $124,000. And if you continue down the row, you look at over a 20-something year span of the outperformance of a $345,000 on the IUL side and the S&P 500 at $203,000. That's the power of avoiding losses. That's the power of avoiding volatility and why life insurance is one of the most incredible investments you can ever make. Now, here's something I also want you to see. When it comes to the Triforce of Wealth, as you see here, all of this revolves around leverage. And what does leverage mean? Leverage means debt. Good debt. Robert Kiyosaki says debt is what the wealthy use. I call it leverage because at the end of the day, that's what it is. It's not just taking out debt just because. It's a leverageable debt. It's debt that can be used so your money's working 2 times over. And life insurance is one of the most powerful and leverageable assets you could have. Let me explain. Say you had $100,000 in your savings account and you want to invest into real estate or you want to invest into a business. So you take that $100,000 out of your savings account and put it into the business. So now you have $100,000 in real estate, but you have $0 in your savings account. Sounds normal, right? You just move money from one place to another. Come over here. In life insurance, say you're getting a 4 to 8% or even 1 to 12% with an IUL on your money in life insurance. You have $100,000 in there and you want to invest in real estate. If you pulled out $100,000 against your life insurance, they allow you to do this. And by the way, when you do this, you don't run your credit. They don't ask you what for. If you try to get a $100,000 loan, they'd run your credit. You put down a down payment. They'd ask you what the business is for, and you still maybe get denied. It's extremely difficult to get approved for loans for businesses and sometimes even real estate. But with life insurance, if you have this money in here, no questions asked, they will loan it out to you. You can get this money taking a lien against it at 1 to 2%, extremely low, because it's basically a line of credit against your policy. So you have $100,000 in there, similar to a HELOC for real estate. You can do that with life insurance. So you pull it out at a very minuscule. It's usually because they're guaranteed to get their money back. So they give you really small interest rates. They know they're going to get their money back. Your money's here. It's never going to take a loss. And if anything fails in that, they can pull their money out there. So they're going to give this to you because it's leveraged. Now you put that $100,000 into real estate, and now your $100,000 stays in your cash value, and it's growing at 1 to 12%, 3 to 7%. But also now you have $100,000 growing in real estate at 15, maybe even 20%. So your money's working 2 times over for you. This is what they call infinite banking. The infinite banking model is how the wealthy get wealthier, is because their money is always working for them. It's always growing and constantly, doing more and more and more. And they're constantly building up their cash machines. And their cash machines are paying back their leverage, and they do it over and over and over again. They always cycle their money like this. They never have to pull it out because it's always growing. And if you could have your money growing 2 times over for you, how much more powerful is that than over here? And then your real estate can pay back your life insurance, and it's this infinite cycle of making money. This is how the rich get richer. Now, all this being said about life insurance, about why it's one of the most incredible things that you're missing out on, that you need to understand, at the end of the day, this is the most selfless investment you'll ever make. Number one, because the most devastating loss you could ever take is the loss of a loved one, where it's you and you have to protect your family or your spouse or anything. You have to protect your family. I cannot tell you how many people who I've known who have passed away, and the first thing I wonder is their family taken care of? Because what people don't understand is when someone passes away, not only do they lose that income, but also all the debts come after them. They could potentially lose their entire estate to the government if they don't have it set up right in protection. So with life insurance, if you have this set up to protect your family, you are going to make sure that you're protecting against the biggest loss of all, and that is the potential of something tragic happening. You need to have life insurance. You can have life insurance started at a very young age for your children to start putting away $100, maybe $200 a month, and let that compound interest grow. By the time they turn 21, you've got maybe $100,000, maybe $200,000 sitting in that account for them to use. How much more would that set up your children or even just anyone in your family, as opposed to just putting it away in savings? You need to understand this, and you need to make this a priority for you and your family, because it is the most selfless investment you'll ever make. The life insurance investment is what will produce generational wealth for you and your family and protects against all losses, and the most important one, the most tragic loss that could ever happen. I hope you guys enjoyed this, and I hope you learned something from this webinar. This is one of the most incredible things that is not being talked about, and I want to spread this message. I want everyone to know that here at Alpha Financial Group, you can get started. Me and my team want to help you with your life insurance to get this set up, whether it's for you, your spouse, maybe you want to set up your kids or a loved one. It doesn't matter. You need to have this for all those reasons. The 3 killers of wealth, the Triforce of wealth, most importantly being life insurance.